Good afternoon, everybody. It is Monday, June 14th, Stocks of the Week with Kirk Spano, and we are going to run through some REITs and then a fossil fuel company and a couple others before we move on to some option ideas. So let's start with just the one that I have up in front of me right now, which is Erststadt Biddle Properties. This is a REIT that is grocery store anchored in the suburbs of New York. It has had a big rally off the bottom. We talked about it quite a bit. And now it's basically grinding out all the easy money. So I don't know this is something that I really want to buy anymore. I think if I own it, which I don't anymore, I sold some covered calls and I got called away, which was surprising to me, actually. I just probably got taken out here with premium at right around 18 bucks. And I think I would need it to drop down to around 16 to buy it again. The options market isn't terribly exciting. So it's almost into its normal range again. So there's not a lot of upside left, I guess would be the point that I'm making. So unless it had a correction to about 16, I don't think I'm going to want this. I don't think it's in my top 30. So good rally, almost done. If you own it, probably find a place to sell it in here. EPR Properties, one of my favorite REITs, because I believe that this is perfectly situated for the millennials and the Zers who are making money nowadays. And they're not the ones who got really hit too hard by the unemployment from the pandemic. So this stock, I think, has a lot of upside, has a lot of growth potential, and is going to, be a pretty good dividend payer long term. So any small pullback, I think I want to buy this somewhere in the 40s. It's in the low 50s right now. Over the summer, I do expect consolidation and churning. So keep an eye on this one. If you get in the middle 40s, you probably want it, because I think its upside is, way up here, a triple top sort of thing. Maybe it breaks through, who knows. But even from 54, I think you're looking at a pretty good rally up into here somewhere if we don't have any churning. So, selling puts on this one should be an idea that we'll have here in a couple minutes. Vici, one of my favorites as well. This is probably my favorite REIT. And I think that their upside is pretty good into that 40 range, probably. And it's just a matter of, did you buy it when we first started talking about it in here, or didn't you? And if you didn't, I think maybe it's run just a little too far. I have a speculative retracement line here, and this can, adjust. I'm just kind of guessing. So if it's got a little topping here, we'll find out in coming weeks. And comes back down here into the 30-ish range, I think you probably want to jump on it. You probably get a nice run back up to 40, and I think the dividends are going to increase pretty substantially. And I think gambling, with everything that's going to happen online and the integration of point systems between hotels and online gaming platforms, I really see Vegas doing really well for an extended period of time again. I don't see a recession in the next several years, and I don't think they're going to taper all that much in the next several years. I think it'll be very minor. I think those will be opportunities to buy. And at some point, like I said, there's another huge wave of bailouts and money printing as we get to the end of the baby bust, 10, 20 years out. So I think this is one that just keeps churning out money. Rents will go up, mortgages will go down, free cash flow will increase. Another one that I love is Stag Industrial. I think as supply chains move back to America, they have a ton of money that they can make. It's just a fantastic business model. I'm trying to do it at the smaller scale with some of my money. I do think this rally here has gotten a little bit ahead of itself. If it can pull back to around 34, 35, I think you can get in here. I do think it's going to make a run at 50 in the next couple of years. And the dividends, again, will continue to go up. Think of these guys as part flipper of industrial property and part landlord. Camden Property Trust is one that I took off the VSL a while back. And I think that they are overvalued to begin with. And they're also very overbought. So a correction is pretty imminent, I would think. It just happens to be at a 618 line. So where will the new investors come from? I just don't see this as being too sexy. I think the dividends rally, chasing the yield, is probably about done. Their finances aren't as pristine as people think. And I think retracement down into this area, somewhere between here and here, is extremely likely, as they show that they're pretty much as good as it gets with this particular type of property. Take a look at Enbridge here for a second, if I can find them. There you go, Enbridge. A number of articles on Seeking Alpha and other places are talking about how Enbridge is not in a secular declining industry, and how they have a fortress balance sheet. I have no idea how you can say that about a company with so much debt. Yeah, they got to extend some of their debt, but the idea that I should rely on other analysts who are typically wrong to set my expectations, which is one of the karate kids of dividend investing is saying, other analysts say this, so therefore it's going to do this. Yeah, that's just such a stupid approach to do an analysis that it kind of blows my mind. What it tells me is that that particular analyst, the karate kid I call him, doesn't have any idea what he's talking about. He doesn't read the documents. Weirdly, they have access to the same AI platform that I use, and he doesn't use it. And he doesn't read the corporate documents. And what you can see here pretty clearly is a trend that's down. That is a long-term downtrend. There is no upside in the fossil fuel industry. And this idea that they're going to transition to clean energy, yeah, well, they still have 99% of that to do. And it's going to be expensive. So this idea that Enbridge is safe, look at the chart. You have to be brain damaged to think that. I don't know how much more clearly I can put that. The idea that they're going to grow is asinine. And, they're going to get more regulation on emissions. Google Enbridge Line 5. You can see that they're having all kinds of problems replacing lines that are very important to their revenue. So the oil pipeline companies, and these guys account for 25% of oil piped in North America, it's just not a good business. We have Kinder Morgan because it's essentially mostly natural gas and then some carbon dioxide. But these guys, they're at the other end of the pipeline scale. I mean, every pipeline is not the same. Natural gas can be converted to hydrogen, but these guys, their biggest money is oil and liquids. They got problems. So I would expect that this stock to come all the way down here, somewhere into the 20s, and it might even go down into the teens in the next few years. So if you own Enbridge, sell all of your shares, say thank you very much. This red line is a conglomeration of where the buying pressure is over this particular time frame. This is really about as good as it gets. You see how my arc kind of meets right there. It's a little bit below that peak, which is a little bit below that peak, which is a little bit, well, quite a bit below that peak. I think you're going to see this start to turn over. If you don't understand what these guys really are doing, and you don't understand what line 5 is, and there are other lines that are having problems, that the EPA is going to regulate emissions tighter, that there's going to be legal challenges to this company, people accusing them of things, and at a minimum they'll have to defend it. And I just have no idea why people think that this is a great idea. All the dividends out there who wants to deny that the secular trend is towards more carbon neutral and away from fossil fuels, let them dig their own financial graves. I get pretty tired of explaining these things. I think I'm just going to start making fun of them on a more regular basis because it's entertaining to me. All right. So Invesco and BlackRock, I took off the VSL a while back. They are way up there on RSI. If you haven't sold these yet, you should, right? Now that looks like a topping process. We'll see. Be okay. And I know you're not in the industry, but I see it because I get the ads. A lot of new ETFs out there, and I'm telling you, the pricing pressure in ETFs is real, and the ability to collect assets is real. Because the one thing that we know is that everybody likes a new idea. So while iShares are still a leader, their growth rates are going to slow down. They're closing in on a fib level. Yeah, I couldn't see owning them above 600, to be real honest with you. I understand there's an argument for around 700, but they'd have to get all the way down to around 600, and then we'd have to be at the start of a consolidation phase in the market. And right now, there's new competitors entering. TNT, still a buy. Discovery, still a buy. Like a screaming buy. Put this RSI. Take a look. There's not a whole lot, but the SPACs are all sold into oblivion. If you want SPAC exposure and you can get these companies down around 10, go ahead and do it. Vidal just keeps giving you a chance. Teladoc, I mean, look at that. I think that that's going to give you that range. I think you're going to get this one under 100. JD.com, dump your commie stocks. Contract has been jitterbugging. Still calling you, right? Try to help you with your mental health by making you money. You want to keep selling the puts here, accumulate this one. Here, Discovery, almost oversold. Ajax, buy signals and neutral signals, so that's positive. I think that if you don't own Ajax, you probably want it. Yeah, I mean, we talked about this last week. That's exciting. That's exciting. The company's going to make some money. I don't know that it's going to go Carvana crazy, but I think it's going to make its way at least up here. I think this one could probably double pretty easy. And we'll see where it goes from there. Azure we've talked about as an Indian solar play, right? Got down into below our buy zone. So folks who bought it in the teens last week, I think you did a good thing. People who are buying it in the teens this week, and I think you'll get some volatility. So if you get it under 20, that's fantastic. I know a couple of you got it at what, 19, 20, or you sold puts down there. Is that what it was? I don't remember if there was a put market on this. I think somebody said they got it at 19. So at 1943, so it says. Okay. Somebody asked me about the Merck spinoff, Organon. I don't know much about them. We actually put the Merck SWOT report up in the last week. Somebody says 111 degrees. Where are you? In Vegas, Arizona? A couple people bought it at 19, at 1920, 1940 for Azure. Somebody's in Phoenix, yeah. So still not a lot of things to buy. I really encourage you to fill out your SPAC basket and focus on the companies that that we've looked at, which don't have a lot of warrants. I got rid of the Apollo related stuff because I just don't like what's happening with management at Apollo. I think, when there's transition in management, you run some risks and there's unknowns, so skip it. Liberty Media acquisition, I still like. Aries is all right. But, when you get these around $10, there's just not a lot of risk. So if they make a great deal, hey, good for you. If they make a deal that you don't like, you cash it in for about what you got into it. I mean, I hope that everybody understands that when a SPAC has a price of about $10, and that's about how much cash they have on hand, and you have redemption rights, right? There's just not a lot of risk there. So you have to buy these in small bits because the price will move a nickel or a dime on you pretty quick. All right, any other questions? So if somebody asks what's happening at Apollo, take a look at what's happening with their management. Read the headlines. Just look it up. Right? They got one guy resign, another guy who's looking to jump ship. I just don't want to deal with managements that are in transition. That help me focus my money on this one. And I still have money in Fortress. Cone, we still have money in Cone. Gary Cone is about as connected as you get. And a couple of other ones that we've taken a look at. So, here, let's take a look at Open Door. I really want you to understand what Open Door is. I have bought shares and sold puts on this one. Think of it this way. This is the biggest home flipper in America. So I put up some stats last week that showed how much money can be made in flipping homes. And these guys are flipping homes by the thousands and selling homes by the thousands. So this company has first mover advantage. It has a great business model. It's going to put pressure on your individuals that want to flip properties. Like I said, I'm learning very fast that if you can't do some of the hard work, the sweat work on a property, it's hard to do it as a financier anymore, which I know people like to do. They just like to give, be a hard money lender and then take half. Well, people who want to sell don't have to wait for those deals to come through. They just call Open Door. Will you buy my house? Sure. How much? Let's figure it out. Check's written. And those deals are getting done and closing in a week. So Open Door, just think about it like house flipping. What they're doing is, I think, going to be mega profitable. I think they're going to smash it when the market softens up a little bit, right? When everybody's not just running around making cash offers for 20 and 30% over asking, you're going to see Open Door make a lot of money. Man, the day and age where people just write checks for way more than a house is worth with the idea, well, I'm going to be here 20 years. Those eras come and go quickly. They're around for a year or two, and then bam, there's a reset. Now, I don't see a sharp drop in real estate prices, but I see a long consolidation period. Just like I see in the stock market, where quality is separated out from less quality. I really think this should be in your portfolio. This is a top 30 stock in my mind. It'll be on the plug and play for the next quarter. I really want you an Open Door. Same percentage of everything. I mean, every single stock that I own, I start with about 1%. Then I sell a put to get another percent. And then I either buy it on a dip or I pyramid it up again. So work your way up, step at a time, a percent at a time. You might end up with 2%. You might end up with 3%. If it appreciates, see where it gets to. Okay, so we want to take a look at some cash secured puts on some of these. I'm just going to take a shortcut. Actually, I'll pull this article up. So this is the quarterly piece, almost quarterly piece, but removals from the VSL, because I was reviewing it. You really should go back to this article. If you own anything on here, take a look at the chart, see what it says. Now, I've added Discovery back because it came down 50%, right? I got rid of it on valuation. I'm adding it back. But almost everything here, if you own it, bless your heart, right? That's what they say in the South. Probably ought to get rid of them, especially if they have those funny looking charts that go straight up for a month or two. So let's take a look at Dave Zannoni's article, by the way. If you haven't read it, you should, because he hits it on the head with where MP Materials is going to make a bunch of money in the next couple of years. So it's not just the processing of rare earth metals. When they get the magnet factory up and running, they're gonna make a bunch of money because this EV revolution, if you're paying attention to the news, it's coming faster and faster and faster, not slower and slower. So stock market jitterbugged all over the place today, right? Kind of closed up. It moved up at the end. It was down a couple hundred. Take a look at some of these. Open, I don't have that alphabetized yet. That's the newest one for me. Board came off, so you want to take a look at your option positions. So what options do you own on this one? I'll just show you some management of existing positions. Who has sold puts on Ford? What dollar strike? In what month? I have sold some 14s. I got over $2 for these a while back. So you could certainly close these if you didn't need the options put to you. With the share price coming down, this equation could change a bit, right? So, be careful here that you don't get out in front of yourself. But if you have puts, you're, half of that premium is gone, you may want to take your profits on a lot of these. EST Space Mobile's been all over the place in the last week. I haven't looked at the Friday update for the Russell. As far as I know, they're not in yet. So those of you who sold the covered calls for, I think it was July, you were selling them, right? Selling 1250 covered calls. Look at those coming down. There's not really any point of closing the covered call though, if it's not shooting up on you. But if they do get added to the Russell 2000, then this probably shoots back up, right? And you might get called away. So I might be taking my profits here on any calls that I sold when AST was up around, what was it, 12? So, these are the kind that you can close if you don't want to have the stock called away. If you don't care, then do nothing. So where else have you sold cash secured puts or covered calls? Somebody says MP Materials was added to the Russell. Yeah, I think I saw that. Ford September for $1. You sold puts. Is that what you did? Okay. So September's you sold for $1. They're at 20 cents right now. I have these too. I'm not doing anything with these. Okay? It's just going to expire. Most likely, it's going to expire. But any puts that you sold on stocks when they were higher, and now that the stock price has come down, you can probably take some profits if you like. I might have said that backwards. So you sold this for $1, it's 20 cents. It's actually going up right now as the price comes down. So you might want to close this, but you don't want these put to you. I don't see Ford going under 12. So I think there's a lot of argument for if you're managing your position sizes right, you don't have to do too much. But I have puts sold at 11, 14, and 17. And right now, just about even on these. That's about what I got for them. I have about 2 on these. I sold them a different week. Like $1 on these. So you must have been selling them about when I was mentioning it. I would love to have a double position in Ford. I think it's one of the safest stocks that's likely to double or triple in the next 3, 4, 5 years. You already saw that they've accelerated their ramp into EVs and hybrids once. I think they're going to accelerate that again. And I think this is a stock that has a high possibility of becoming one of the millennial favorites. And who knows what they can bid it up to. So again, not a lot of downside, good upside, and potential for, oh my gosh. What else do you want to look at? You can sell puts on almost anything that's oversold. Right? Teladoc was close. But Fidel, for sure. You can go ahead and sell these. Sell the hundreds. I think on last or 2 weeks ago, I had the hundreds on here. Yeah, hundreds. right? Because these were up to $6 or $7, weren't they? These are going to start becoming popular soon, now that we're getting to the expiration on June this week. And I actually think this is something that you could play through December if you really wanted to, because what do we know about this company? We know they're likely to engage in some sort of a transaction. So I don't think there's a lot of downside below around 100 for these guys. That seems to be where, right? Students a little jitterbug. There's not really downside here anymore. You got big buyers, you have management looking for a strategic transaction. You got plenty of buyers out there. I think you should have a position and sell a put on this one. All right. Any other questions here? No? Okay. Not really any swing trade ideas for this week. I'm going to talk to Scott. But I think that the oil trades are setting up. I really think that August is probably when we get our best deals. But look at that. Boing, boing, boing. Does it break out a little bit here into summer? I don't know. I think a lot of people already anticipate that and have acted on that. I think when this Iran oil starts hitting the market, be careful with oil if you're on the long side. 2 million barrels a day coming onto the market from Iran, and it's legal. So, that's going to change a lot of equations. I mean, they didn't really have everything come off that we thought they were going to have come off when President Trump bailed out of the nuclear deal. In essence, when they bailed out of the nuclear deal a few years ago, they got very little in return because Iran just kept sending the oil to China. Put it on a boat, float it over there, reflag it. But there's 1 to 2 million barrels a day that did disappear. All the overland stuff, all the stuff that they can't just sell to China. But that's something else to keep in mind, is that China has a ton of oil in storage. And our strategic petroleum is filled to the brim. So now you have sovereign buyers basically out of the market because they bought cheap as more oil comes online. I think you see the price of oil drop $20, $30 a barrel over the winter. That's going to really impact the idea that companies like Exxon are just be able to cash flow their way to being carbon neutral in 20 or 30 years. 1, they don't seem like they want to. 2, they're still fighting with the activists. The activists now have the ability to put pressure on them. Exxon's just, I'll tell you, and there's going to be a trade here where you can buy puts. And again, I think that you are finding spots to nibble. And the event probability, right? The probability of an event driving this down is much, much, much higher than something driving it up. Because supply and demand dictates the price has to come down. There's way more supply available than demand that can develop. It's fast. And at some point, countries and companies that need the money, as they have always done, try to cheat and get more oil onto the market. Did you notice what Shell did this week? What they announced? Shell's looking to sell all their Permian assets. They might not even get cash. They might have to take shares in a company like Pioneer or just get debt reduction. Someone might just assume some of Shell's debt. So I'd be surprised if Shell got any cash for their Permian assets. Just like all these other companies did share deals. I mean, Shell's going to say, here's our Permian assets, here's some debt, take the debt, take the asset. What does that tell you about the value of oil going forward? All right, I'll let you go. Call it a short day. I'm going to chop this up tonight and put it out there. Already got the article well on its way, and we'll get this done tonight for you. All right, have a wonderful evening.